Will uranium be able to break free before we possibly see this overall correction in the US stock market and a possible long-term bear market? We're going to talk about that in this video. I'm going to give you the data. I'm going to show you a bunch of things, and I'm going to leave it up to you to decide that. We're also going to talk about a lot of news related to the nuclear energy industry, and some of it is negative, especially over there in France. We're going to touch on that today. We'll look at all the uranium stocks, see how they're doing, and we'll look at the overall market, and I'm going to give you my opinion on some things, and we're just going to jump right into this. So uranium stocks overall did really well, holding up because we did have somewhat of a sell-off in the US markets. So you can see the percentages here. A lot of them still on low volume. The ETFs have been selling, their percentages down. It ended yesterday on the 7th. So, there was a lot of volatility, and we've seen this the past few months in uranium stocks. And the same thing in Australia. Some of them closed in the red. So we'll see how uranium does today. With EDF there in France, they are actually going to have to report to the government by March why they've had these safety-related nuclear outages. And this is just unfortunate. Nuclear energy has been very safe in the past, 10 years. And it's unfortunate that this is happening, especially at a time like this. Now in the US, it's pretty reliable. Nuclear energy, it's right now currently down 4% of the overall percentages. Outages is only 4%, which is pretty good. We've seen it higher, obviously, when they do refueling here, which was, back in October. That's usually when this happens. But if you look at the graph overall, it's very reliable, this baseload power, but it is unfortunate what's going on. So, I got to keep an eye on this. We got to see what happens there in France. Hopefully they can get everything fixed. We've had some of these same issues there in China. Some of these numbers have reported. But what I really want to talk about today, and what a lot of people seem to think, the overall US stock market we've seen pretty much go up forever, right? And this is a chart, I tweeted this out, and this is a 10-year chart. This was from 2009 to about 2019. Now, these are all of the reasons that the market had these drops, but you can see it still had pretty much a 500% increase since then in this 10-year period. And I mean, we've saw so many different types of things that were negative, And this is what the overall US stock market looks like. But some alarming things that we're starting to see, and we'll jump into a chart here like this. This was the Japanese stock market, and this was in 1989. Now, the Japanese stock market has never recovered back to its previous peak. Now, you see the blue line here. This is obviously the US markets. We are in this parabolic curve here, okay? Parabolic, just unbelievable what the stock market's doing, but you can see this looks very similar to what the markets did there in Japan, okay? And everything, they had like 32 of the world's biggest companies at the time there in Japan. A lot of what's happening in the US today. And they went through these lost decades, multiple decades where the stock market was just really in a downturn. People didn't believe really in investing in the markets. Now, their culture, things are a lot different specifically back then than what they are here in America now, but a lot of similarities are starting to pop up. And this is why it's on my radar. And pretty much a lot of the people still investing actively in the markets only really know a bull market. You can see back here, that's really what even people that were investing in the markets from the back in the 1980s and 90s, if you had invested in majority of the big stocks, you'd still be up like crazy. But if you were investing at this peak here in Japan, you, for decades, never really recovered your losses. This investor capitulation was probably horrible. Now, one thing to note, with me studying history, this was a very interesting time in Japan right here. When we saw these, continued decade plus of capitulation, we saw a bottom here. And this was really when some of the best traders in the world came out of Japan, when the market actually bottomed. And actually at the late 2001, some of these traders were making crazy amounts of money trading the market in swing trading, buying these, companies that were somewhat beaten down, undervalued. And up until the global financial crisis, these people were some of the best traders in the world, which is crazy. I mean, making hundreds of millions of dollars. Some of these were amateur traders, and it is pretty interesting to see. So Just because if the US market is in the same parabolic market and we see a drop in the market, if it is a long-term bear market, it does not mean that the market, everything's over, that there won't be opportunities out there. I think that commodities, things that are assets like uranium, I think that they could see a big move, especially if they can somehow detach from the overall market. And that's what I really want to talk about. But a lot of people, I always see that chart there. I always see, especially YouTubers, always talking about it. You know, the US markets, if you just keep investing. But the same thing happened in Japan, okay? The same thing happened. And no, it's never recovered back, you know, to its highs, to its parabolic move. And you got to look at just visually, you can see this is parabolic, okay? This is not natural, okay? This is not natural. Eventually, the rates have to rise, and this parabolic move will have to correct some. And nobody knows when this is going to happen. You can't, it's very hard to time the market, but I am heavy cash. And this is one reason. Now, if you look here, this line, this little black line is the Japan's debt to GDP ratio. So if you look at this, it's just been going up since obviously the 1980s. The same thing with the US. This is the US here, even more. So this is pretty alarming. This was one of the reasons that we see markets go into this parabolic move. But eventually the debt has to be paid. Eventually rates have to rise. We're going to see a big move, I think, in the overall market in these overvalued stocks, probably into commodities and into the other things. And, you know, we're looking at this commodity. If you look at the overall markets, we're looking at this commodity super cycle start. You know, just in the past month, everything is up except we've seen gas correct a little bit. But that was really, in my opinion, still artificial because they're up 300+%. The Euro natural gas, we know there's issues going on. And, you know, uranium down here, uranium's corrected. We saw a big move, still up 48% overall. But, you know, when you have such a big run in a commodity that hasn't ran for years, it is normal to see an opaque market like this, in my opinion, retrace back. We got to have more volume in that spot market. We got to see the overall long-term contracting start to come back in the next year or two, maybe even sooner, hopefully. But you can see that there is money obviously moving to commodities. Oil is probably going to break $100. And, you know, when that happens, we could be near the peak of this overall market. You know, you can't time the market. You know, markets aren't always going to be the exact same, but a lot of times they rhyme. I posted this back in 2020, and this was me comparing the overall market, especially uranium, to somewhat of a bubble. You know, you have this first sell-off phase, the awareness phase, people start to hear about it, but then you start to get this media attention phase, but it looks very similar to the prices of uranium in each cyclical bull market. It looks like our stock market right now. Everything is in an asset bubble. Everything is a bubble. And, you know, it's visually, you can just literally see it. And eventually you get to this new paradigm mode and things drop. Now, will uranium be able to break free from the market? Because I really think we're kind of in this area, this first sell-off part right here. You know, I thought back then that we might have been in the sell-off phase, but if you stretch it out, this right here could be multiple years, okay? We don't know until this contracting comes. And then that media mania phase is going to start, I believe, in uranium, but it does have to break free from the overall market. Because if we saw a market correction 50, 60, 70%, something crazy for the overall market, we could see the US stock market plunge and pull everything down, okay? Now, one other thing that happened in Japan, the population decline, we're starting to see that in the US. So the annual percentage change in US population, this was the past 100 plus years, and it's less than 0.5% now, which is very alarming. We haven't seen this, I believe this article had said, since the founding of the country. Now remember, the United States is very young compared to other countries in the world. So especially comparing them to Japan. But if you look at this is very alarming. This was one of the big reasons, and those low interest rates and, that they had in Japan, negative interest rates. Eventually it really started to do damage to the economy and the overall markets. And we're starting to see this in other countries as well. Russia loses 1 million people in historic population fall. This was a recent article. We're seeing UK population estimate scaled back as these deaths set to overtake births. We're seeing the same thing just worldwide. This is another great graph kind of showing projections as well in the future where the time which the number of deaths exceed the number of births. So you can see that within the next probably 30 years, we're going to start to see this more, in the West, Canada, South America, parts of, Asia. So this is alarming. This is alarming. This is, because if you look back, this was one of the main reasons, not only interest rates, trying to keep those artificially low, this parabolic move, everything is really pointing, the debt really pointing to a massive correction. And, I would not be surprised if this right here is really kind of where we're seeing this peak. We don't know if this could continue to go up. Nobody really knows. Are we going to see that type of mania? PE ratios are starting to get crazy, in the US market still. So I also retweeted this today, and this was back in September. I said winter is coming and I'm cutting out some laggards and larger stocks and would like to have more cash for flash deals in uranium. Bullish on uranium and commodities even more, but I was talking about how the great inflation fear is returning. This was when people were still really pushing the overall market, stocks that were way overvalued, not just in uranium. I'm talking about the overall market. And being a contrarian out there, I sold a lot. I'm over 50% cash. And, if we look back in the markets, we could see the 52-week high. That's around when the 52-week high was there in September. Look at the drop in the uranium stocks. Everything. Doesn't matter what stock it is, massive, massive correction. Some of these 50, 60, 70%. And if we look at the loss gain chart, you see 60, 70%. Look at the upside. I got a lot of hate back then for that. And I'll say this again, I'm being very transparent. These videos really, putting them out there, I put myself on the line when I make these videos. I'm not selling courses. I'm not trying to predict the market. I'm not telling people when they should buy stocks. But it is pretty nice to look back at these videos and say, okay, yeah, I made a right call for my own self. And now I have cash to buy a lot of these dips. And I haven't bought anything recently yet. I am very bullish long-term commodities, especially uranium. I think that the uranium price needs to move up above $55. We need to see more volume in the spot market. It would be great to see long-term contracts come back, at least some of them starting, hearing word of that, because the overall stock market could be setting up for something very unfortunate, a long-term bear market. And I don't really think it's going to be like 2020 where we see a big correction on the upside very quickly. I think these things are going to possibly be a long-term investors type capitulation move. And, uranium is not going to be immune to that unless, the prices start to go up very fast, because we already saw the overall uranium market. We already saw what uranium stocks do just with, when some of these big stocks start to bleed the overall market, people start to get fearful. Uranium is not immune to that. And I'm pushing this out there. It's not a necessarily popular opinion, but I'm being transparent. Again, I don't sell courses. I don't tell people when to buy stocks. I don't tell people when to sell them. I enjoy making these videos. I enjoy looking back, on my own research and seeing how I've grown. And it is nice to see a lot of these things. They are, still low price, because I do think that these companies, a lot of these uranium companies, can bring in a lot of money in the future. There's a lot of things in the market I think that are overvalued, and a lot of uranium stocks that are probably overvalued now still, especially with uranium price not where it needs to be. So we'll see how things go. I'm going to continue to keep watching the market. I'll keep you updated. There's a lot of big documentaries I have coming.